Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the recent price action for Bitcoin, taking a look at what's been happening most recently and what we would think is likely to happen next. As I get into the video, if you find it useful and informative, smash that like button, I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, then why not check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. And if you are looking for a little bit more from the crypto space, then why not check out the Patreon services or the YouTube membership services that we have to offer. The Discord server opens up massively for our members, so why not check that out if that's of interest to you. There's a whole host of additional benefits. Let's jump right down into this one, right? Because we are going to be talking about the price action of BTC. We're going to be taking a look at both from an Elliott Wave theory point of view and a smart money concepts point of view, help us understand the market structure and where we think things are likely to go next. So let's actually just kind of reflect on what we were talking about yesterday. We had scoped out this low range down here at 18,877 to 19,293. This is an approximate area based on our wave 4 being complete. Looking at the data here today, I would say it's possible that wave 4 might not even be complete just yet. And what's actually occurring here is a three-wave structure where we got to come up just slightly higher than we got to before, which was 20,684. So let's go into that and kind of ascertain whether or not we think we are complete with this this fourth wave or not, right? So as we kind of think about this, we can see that we had this structure come up to 20,680. I think it was 6 on the high, yeah. So we got scoped out at 20,684, or $2 above that, and then we can see that we came down. Okay, now the interesting thing is we haven't peaked down lower than the origin level down here, which for intents and purposes, I will just repurpose this line, just put it down here. This was 19,549. So we are in between these two ranges, right? So this is, you can argue, a ranging market, although we have only really tested the top end once and we haven't come back down to the low end just yet. The thing that we have here, the issue that we have, is that we don't have a clean structured move down here yet. Okay, I do think there's going to be a move down into the lows, but it's also possible that we haven't yet finished that fourth wave upwards. So let's go ahead and make our structures, and we'll see how this kind of plans out. Okay, so here we would basically be looking at a move slightly higher, which would put us right in here, about 20,915 to 21,196. Now, I don't think we're likely to kind of push as high as that. It's all going to be today, okay? So I think if we take a look at our stochastics here, we can see that the hourly has that potential move upwards, but the 4 and 8 hour do not, okay? They're overbought and they need to drop down. So we know that the momentum on the 4 hour and the 8 hour is going to shift to the downside, but there is still upward momentum on the hourly chart. So if we're going to have this opportunity to kind of push up any way possible, it has to be on the hourly. The daily possibly, but I think it would be unlikely to see the daily move like that at the moment. I think that has to happen after we come down into that fifth wave low. So if this is the case, then we'll be looking at this as a three-wave structure. We'd have to peak up above that 20,684. Okay, so that's kind of scenario number one. And because we're in this kind of move here where we don't have a clean structure yet, it's really difficult to know exactly which way this is going to go, okay? So this is one scenario that could play out. The other scenario is that we've started our descent to this move to the downside, but again, we're not going to know which way this is going to go. Now, this is the thing, when it comes to trading, trading the fifth wave movements are incredibly difficult. They can be predictable, but essentially it's kind of just a retail wave, right? And the big ones that you really want to get in on are the wave 3, right? The wave 3 is really where you want to be kind of really trying to position yourself. So you wait for a wave 2, you kind of jump in on wave 2, and then you ride wave 3. You usually come out at wave 3 and just let 4 and 5 play out, and then you kind of move on. Now, you can trade the fifth wave, and if you are looking at trading, then why not check out BitGet, linked in the description down below. There's some fantastic offers available on BitGet using our affiliate code down below. Everything from a cashback offer where you deposit 50 USDT and you'll get $10 USDT back, all the way through to deposit bonuses up to $8,000. So why not check that out down below if you're of interest in a new trading platform that actually I use and I recommend to anyone, because I think it's much better than many of the other ones out there. We also are doing our own competitions with BitGet down in our Discord server. where essentially you can win every single week with the best ROI. So basically, anyone who signs up with our link down below and has the best ROI percentage for a week will win $100 USDT. That's a rolling competition every single week. It resets at the end of the week and a new competition starts. So check that out. Linked in the description below. Join us in Discord for more details on that one if that's of interest to you. So when it comes to trading this, you can trade it, but you have to try to make sure that you have a nice area where you think about shorting the market if you're going to. Like I said, we have this ability to come up into this range here. So if I were to short it, and I was really confident on the move to the upside, which for the most part looks like we might get, then shorting it from up here might be the wise way to go. And then of course we have our targeted range down here, and all of a sudden we could be looking at a risk reward ratio of about 3.09 on that particular scenario right there. So I think we can trade this, but we have to wait for confirmation of the direction. So let's jump into this, right? What gets me a little bit interested in this structure. So for starters, we have this move up. We have a correction that comes down afterwards. So let's go ahead and take a look at that. Okay, so right in here, we can see that we have this move down, then we bounced up. Now, we haven't hit any impulsive trigger points, okay? They actually happen up here at 20,685. So for the most part, this just looks like maybe a WXYXZ scenario. So if we go ahead and assume that, then we can actually end up in a reasonable position. Where we might actually just be looking at this peaking up into this range up here under a WXYXZ. You can kind of see that we could be a pretty broad range. It would be very low end of our higher target range. So we would basically be finishing in there. It's a bit of a broad one when it comes to a Z wave. So let's go ahead and remove that, and I'll draw these on. So basically W, X, Y, X, and Z. Okay, so we end up with that kind of structure right inside there. Now, with that, you can see that little overlap. That is going to be right in there between the 20,917 all the way through to 21,019. So that's the area that you might think, okay, well, you get continuity between the ABC structure and the WXYZ structure. But essentially, it can be anywhere really from this low side at 20.5 and so forth. Either way, once this is done, if we do fail to kind of breach above the $20,686, this high, I'll go ahead and snap this on. If we go ahead and do fall lower than that, then we probably have already started our descent, and it's going to be deeper than this, like I spoke about yesterday. Okay, so when it comes to Bitcoin here, this might sound really confusing, so I apologize if you are not overly familiar with Elliott Wave theory, but I have put together a course, 𝗕𝗘𝗪𝗀𝗠𝗪.com, linked in the description below, and hopefully you'll make a little bit more sense on what I'm talking about in these videos. But essentially here, it looks like we have the ability to push up slightly higher, and we could basically finish off this WXYXZ structure. It's not a guarantee though, because like I said, this is a very complicated market from an Elliott Wave theory point of view at the moment. We do have momentum on the 1 hour, but we definitely do not have it on the 4 or 8, and I am looking for the descent. So the bigger macro picture here is a move to the downside, and all we're really saying is there's a potential move up higher. So if we're to short here, we want to be shorting from the higher range, not from the lower range, unless you want to give yourself a really broad stop loss. And you're probably going to want to put this really high up. And then obviously if you're thinking about risk reward ratio, it's not going to be great. So you're not really going to want to do that. So you're going to want to try to enter into this thing right around the ranges where you're going to have maximum kind of gains, right? So if we were to think about that 20,919 area, I'll put the stop loss up slightly higher than that previous swing high. And then you come on down a little bit lower. You can see a risk reward ratio of about 2.12 approximately if we were to go for the lower end of the target. Higher end of the target would be about 1.7. Personally, when it comes to trading, I like anything above 1.5, but obviously you don't really want to be going terribly too much lower than that, in my humble opinion. Anything above 3.0 in terms of risk reward ratio is where you really want to be, because that's really where you're going to see your account grow quite massively. Anything lower than 3 has a huge increased risk to it. Plus, you have to win more. Whereas if you have a risk reward ratio of 3 and you're consistent, then essentially you're going to end up growing your account with minimal wins and actually a lot more losses, believe it or not. But if you're smart about your risk reward ratio, you'll end up in a really strong position. So essentially we'll end up looking at at trading, anything kind of around 1.5, I'm quite comfortable with, but that depends on the person, essentially your own personal risk reward ratios. Now, I'm not a financial advisor. I can't give you financial advice. I can't give you anything like that. All I can do is give you my thoughts and opinions on the data in the charts as I personally see it. So yeah, that's where that sits. Now, this is Elliott wave theory. That kind of gives us an idea that there's a potential move upwards, yet to be confirmed though. So we'll keep a close eye on it. And if we're going to do this kind of thing, it has to be done today within the next 24 hours. Failures to do that, I think we're going to see a breakdown. Now, if we take a look at it from a smart money concepts point of view, we can see on this hourly chart everything that's been going on. We had our change of characteristic from bullish to bearish. We then have confirmation that we're bearish, another confirmation that we're bearish, and we're still waiting for another one after this. And I think that's going to come. So that hasn't changed. We can see that we have our imbalances in the order books. We have one right here and up here. I think these will come and get filled out later. I don't think they're going to get filled out right away, but they will get filled out in my opinion. Now, as we kind of think about where price could be going here, right within this range, it could fill a little bit of this, but it won't actually fill it completely. And it's no coincidence that equilibrium sits right between the 1-to-1 and the 1.236. Essentially, that area that I was drawing out earlier, that 21,000 to the 20,900, that one right there, happens to fall right inside equilibrium. So that three-wave structure, that A, B, and C structure that we were drawing out, falls right in equilibrium. That's an interesting thing because equilibrium is an area that price action likes to kind of fall back towards. And as such, you could argue that this is going to be our resistance lines and where we're going to get rejected from. Likewise, when we have our WXYXZ scenario, we can see right in here, if I grab hold of this, snap this to here, move this over to that recent low, you can see right in here as well that we can push up into this range here, and that also falls just short of that equilibrium area. So again, could be resistance for us in terms of our WXYXZ. So WXYXZ right like this, and then we can see that we're going to be in that resistance line. So yeah, it seems that seems to be like the most probable based on not only the momentum, but also the counts of the waves. In here, we can also see that we had a minor change of characteristic from bearish to bullish. So essentially, we are looking for a slight move upwards. We've seen a little bit of it. Now, naturally, you do retrace after you see these. This isn't unusual. So you'd always kind of wait for the change of characterization, drop down, go long if you wanted to in this case, or wait for that confirmation. The break of structure will happen here, but I think it will not last very long before we reverse back down. Like I said, equilibrium here lines up quite nicely with Elliott wave theory and where we think resistance is likely to be. We would not, in my opinion, fill that entire gap in one go. I imagine that we'll come in and then just come right back down again. We have a weak low down in the discounted range, so essentially we are looking to break that and go down lower. We have a strong high. We're not looking to go up higher than that, at least in the short term. So everything here for Bitcoin looks like we are going to be progressing to the downside at a macro level. I say macro level, but at a probably a 4-hour chart level. On this hourly, though, it looks like we have to have that small push upwards before the market goes down, i.e. squeeze the shorts before actually going in the direction that the market wants to. And like I said, over the weekend, it's going to be retail driven. There's going to be a little bit of FOMO where it's a dip, we're recovering. Nothing to worry about kind of scenario that people kind of talk about. I think there is actually a lot more to worry about than what people are acknowledging. But essentially what I do think is that we're going to push up over the weekend. We usually see a little bit of a surge on a Sunday for the weekly close. And then I think we're going to be pulling back down. If that doesn't happen today, then I would lose hope in any ever thinking that we're going to be pushing up into this range before we pull down. And I think we have to kind of have that fifth wave low point before we can move on up in any strong way. So one of those, keep a close eye on it. We'll update everyone again tomorrow on the kind of small time frame stuff. But other than that, I'm going to leave the video right there. If you found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, hope everyone has a fantastic day, and I'll catch you all in the next one.